Hey guys, welcome to today's video. I actually have a question to start it out. On Monday morning, whenever Monday rolls around, the market opens. I'm assuming that you trade if you're watching this video. When the market opens on Monday morning, what are you trading based on? Are you trading based on a trading plan or a certain strategy that you use? Those are good scenarios. Or are you trading based on assumptions? Are you sitting there trading based on emotion, saying, oh, it's at support, the market's at support, let's say the euro dollar, the chart we're on now, hitting a support level. I know it should rise from this level. I'm placing a trade. That's not a strategy. That's not a trading plan. That's gambling. That's an assumption. And today I'm going to show you how to actually gain an edge over the market. As usual, we're going to start by creating rules for trend and structure, and then we need to create rules for a specific strategy. We'll go over all that in today's video, along with looking at the top 5 major pairs. I'll share with you guys some of my top trading ideas on those top 5 pairs for the upcoming week. So if that sounds interesting to you, make sure you're subscribed here to the trading channel. Join the over 150,000 trader community we currently have. Make sure to click that like button for me while the intro and disclaimer roll. I'll catch you guys on the other side. So there's a reason that I'm bringing this topic up today. Throughout the past couple of weeks, at least for my personal trading, things have been very, very slow. I think I've had 3 or 4 trades in the past 2 weeks altogether. And what normally happens, especially to newer traders and traders that are still struggling to make profit, is they tend to be almost addicted to the rush of placing a trade. And because of that, it makes it nearly impossible for them not to trade even when markets are slow and there's no trades based on their strategy or their trading plan, if they actually have one. So no matter which category you fall into, this video is going to be extremely beneficial. Let's start like this. Most traders, and you may fall into this category, say something like this whenever markets are slow or whenever something's not meeting their trading plan, or if they just don't have a strategy. They say, okay, I've heard on the internet that I'm supposed to be buying at support. So right here, the euro dollar made a support level. I'm going to place a buy order. They place the buy order. Their stop loss is down here. They say, well, the internet also said that from support, normally a market makes it back up to the previous resistance level, which would be right here. And they say, I'm expecting this, right? They're assuming that's going to happen with no previous data to prove that it's happened in the past, with going pretty much on nothing, just an assumption and gambling. Then they lose money and they say, trading sucks. I'm never doing this again. Or they continue doing it, bleeding their account slowly. This is gambling. If you fall under this category, it's time to change things to get you on the right path to trading success. So how do we do that? Well, parts of a strategy are rules-based, at least for a rules-based strategy, which is what we're going to discuss today. You need to have specific rules for your strategy that you can take and test in previous data. For instance, I'm going to share a strategy with you right now, so be sure to pay attention. You can also take out a pad and a pen and go ahead and write these rules down. What if you said that you're looking for a volatile trend? Now, that's a very subjective thing to say. Volatile trend, what does that mean? What if you made a rule for that a volatile trend means that the market's under the 20-period moving average? That's a pretty fast moving average for some people. So with that being the case, let's say we're waiting for the market to be under the 20-period moving average. When the market's under the 20-period moving average, you're looking for a trending market while still under that moving average or above it, depending on the direction of the market that you want to be going, if you want to be going long or short. And we're going to discuss more about this later on. It all makes sense in just a second. So the 2 rules we have so far is a trending market under or over the 20-period moving average. With that being the case, we have to now define a trending market, because that's a subjective term as well. That's something we can't really objectively define without rules. So a trending market is going to be a market making lower lows and lower highs. Something like this would be a trending market. So once we get a market that's trending under the 20-period moving average, now we have to start coming up with either new different conditions or new different entry reasons. So what are we going to do next? Let's talk about entry reasons. So in this exact scenario right here, we have a market pushing down under the 20-period moving average. We have a pullback and we go into trend. What we're currently looking for, and let's just add another condition here, is a market that pulls back to the previously broken level of structure. By the way, guys, right here, if the market was right here at this exact point, then right here would be the previously broken level of structure. So with this previously broken level of structure, what we're looking for is the market to pull back up to that while staying at or under the 20-period moving average, which we do here. And then once we get there, we need a definable entry reason. After we have that, we have a rules-based strategy. We only have to worry about stops and targets afterwards. So currently, we've created a strategy. We're waiting for a market that's under the 20-period moving average to trend based on creating higher highs and higher lows, or lower lows and lower highs. And then we're waiting for a pullback to the most previously broken level of structure. Now we have to create an entry reason. This is the whole process of creating a strategy, which is in pretty much a very large part of creating a trading plan. So creating the strategy, we're now back up at this previous level of structure. Let's say the market's right here, and we're waiting for an entry reason. And actually what I'll do is do the market replay. I've had a lot of questions about this. Market replay on TradingView is just right here. All you have to do is go to the top of your TradingView platform, click market replay, take this red line and put it wherever you would like the market to replay from. Right there is what we'll do. We'll say that the market's right here. Using the strategy we just talked about. The market's now in trend. We know that because we've made a lower high. We've pushed down to a lower low based on our previous low. This was our previous low and our previous high. Now we've made a lower high and a lower low, putting us in a downtrend. Now that we're in a downtrend, we know we're looking for what? Well, based on the rules we just created, hopefully you have them written down, we're waiting for a pullback back up to the previously broken level of structure support because we're under the 20 EMA. With that being the case, we'll go ahead and do this bar by bar. Excuse me, did that completely wrong. Sorry about that, guys. Okay, let's hit that one. Okay. So now we'll go bar by bar. Sorry about that. Let's go ahead and do this. Remember, we're waiting for a move back up into our previously tested level of structure, not previously tested, excuse me, previously broken level of structure support. So if we go forward, moving, we get there. All right, we're in our zone. Now that we're in our zone, we have to create an entry reason. And let's say for simplicity's sake, we're going to use a lower low, lower close entry reason in a shorting scenario and a higher high, higher close entry reason in a long scenario. What does that mean? A lower low, lower close is a candle that looks like this. As you can see, we have a lower low and a lower close than the previous candle. That's all we need, right? For entry, based on this little strategy we're using, you can make up your own entry reason. Use a shooting star candle, an engulfing candle, different candlestick patterns, double tops, double bottoms. That's irrelevant. The point of today's video is showing you how to create a rules-based strategy. So this is what we need to have, is all these rules in place. And now that we know we're waiting on a lower, lower, lower close, we can continue going forward. What do we get right here? If I zoom in the chart, you can see that right here we got a candle with a lower low compared to the previous candle and a lower close than the body of the previous candle. Lower low, lower close candle, that means we enter the market. Now that we have our entry reason, all of the conditions we need. Our strategy is pretty much built, but we have to make rules for when we're going to get out of this market, for when we're getting out of the trade. That means we need rules for stops and we need rules for targets. So how are we going to do that? Well, a good idea for stops would be to have stops above the previous swing high, right? Well, that's absolutely true. That's definitely a place you could put stops, but that's irrelevant. What you want to have is rules in place, and you're going to know why in just a second. I'm going to explain why these rules are so important. But what you want is rules in place for a stop loss and a target, no matter what those rules are. You can have a 10 pip stop and a 10 pip target. That's irrelevant, and I'll show you why in just a second. But what we're going to use, well, once I get that off the screen, is a stop loss that's 10 pips above the previous swing high. Just again, being very simple, 71, that's going to be an 81 pip stop. All right, we have an 81 pip stop. We're going to use previous support. Actually, we'll use a 1-to-1 risk reward as our target. Okay, so there we go. We have our trade set up. We'll move forward, moving forward, and we get stopped out before we hit our targets. So we should have had a bigger stop. At this point, you can adjust your stop loss. Let's say we would have done, it's a daily chart, so really we probably needed a bigger stop loss. We'll do something like this and just pretend we won the trade. The point is, you have rules for a strategy. Now, the reason you want rules for stops and targets, for the conditions, for the entry reason that you use, is not so that you can just place trades blindly based on this knowledge every single time it happens in the market. You want these rules because after you have them written down, hopefully you wrote down all these rules again, pick your own entry reason, because the conditions that I gave you are solid. They're very good conditions for a trend continuation strategy, for looking for the market to continue in a certain direction, using a volatile trend, meaning under the 20-period moving average, using the break of structure, being those lower lows and lower highs, or higher highs and higher lows, is also a good thing. And then you picking whatever kind of entry reason you want to use and picking whatever kind of stops and targets you want to use. Yes, you're going to have to do work. This video isn't going to give you the secret to profitable trading, although this video literally has given you the secret to profitable trading, which is get a trading plan in order. The trading plan starts with a rules-based strategy, which is what I literally just gave you right here in this video. So create your entry reason, create your own rules for stops and targets. Once you've done that, the point of all of this is so you can take these rules and you can go back in previous data. You can scroll this chart back. You can take your market replay tool. You will have all of your rules in place. You'll have them written down beside you on your desk with your stops and targets, with all your conditions you need to see. And what you can do is take and scroll the chart back with your market replay, and you can just scroll forward and see how many times those rules happen. Out of the amount of times those rules happened with your stops and targets, how many times did you win versus lost? See how this strategy that you have created now performs in historical data. How it performs in historical data is going to show you a decent projection as to how it could possibly perform in the future. And if you're just trading blindly without back testing, then you're trading one based on a strategy that you have no clue how it's performed in the past, which should be scary as hell. Two, you're trading based on a strategy you haven't practiced yet. So backtesting also gives us the ability to practice trading in the market without live money at risk, which is extremely beneficial. So for those of you who have stayed till this part of the video, I hope you take this information, go out there, actually create the rules for entry, create the rules for stops and targets, and test this for yourselves in historical data. See how it performs. Leave comments below if it's helpful. Leave comments below about the performance of it so other traders can be inspired to test this as well. I just wanted to give you guys this as a thank you for the support you've all given me throughout the past 3 years here at the trading channel. I hope it's helpful. I hope it's beneficial. This video is going to be extremely long. We're already 10 minutes deep, but right now what I'm going to do is break down the top 5 major pairs using structure, trend, and other types of technical analysis in order to give you a projection on what I think those pairs, the top 5 major pairs, are going to do throughout the rest of the week. So let's go ahead and dive into that right now. Before we jump into the top 5 major pairs this week, if you would like the entry, stops, and targets that I use for the strategy you just learned, the 20 EMA strategy that we just talked about, then what I'm going to do is actually be giving that away for absolutely free for a limited time, just as a thank you for all of the support I've received here at the trading channel. So if you would like to get your hands on the video you see on your screen, all you have to do is click the link in the description, labeled 20 EMA, to get my entry, stops, and targets for this strategy. All you'll have to do is actually put in your email address and I can send this video directly to you. So do that if you're interested. If not, that's cool too. Let's go ahead and jump back into today's video. Okay, traders, so now moving on to future projections on the top 5 major pairs. We're going to start on the Euro-Dollar daily chart. As usual, we're going to do this on the daily chart to give you guys an idea of what I'm looking for in the upcoming week on these top 5 major pairs. And something to keep in mind is that there's a huge difference between analysis and trading. Analysis gives you projections of where you think the market's going to go, but trading is based on what I just showed you, which is an actual rules-based strategy. But what we're going to do right now is analysis and make projections on where we think the market's going to go. So here specifically for the Euro-Dollar, as always, I start on the daily chart and I ask myself 2 questions. What is the trend of this current market, and where are the most relevant levels of structure that I'm paying attention to? Currently, on the Euro-Dollar, we are in a downtrend. Let me explain why we are in a downtrend here on this currency pair. If we use this as our starting point, which I'm going to do, we have a push down, a push back up, a push down that does what? Creates that lower low. This was our lower high. Now we're in trend. That's all we're looking for to define our rules, right, for a trending market, or we need a lower high and a lower low. It's exactly what we get right here is a lower high, followed by a lower low. Now we're looking for a continuation of that trend. As we push up, we then get a new lower high and lower low. Now things get a little confusing here, right? We're still in a downtrend. I'm going to explain exactly why, but we have a higher high. This right here, this is a higher high than our previous high. But we haven't closed above this resistance level. And until we get a close above that previous level of resistance, I still consider this market in a downtrend, and my overall expectation is that eventually, keyword, eventually, this market pushes down and creates new lower lows. Not saying that's going to happen right now, and the reason I say that is because one of the most prominent levels of structure I'm looking at is right here. This market has just come down into a level of support that is held for a very long time and in many different situations. And you can tell that by looking at the market here. We have support, support, support. You can call this another test of support. This is another test of support. So with the market right here, this is also a head and shoulders pattern at this big major level of support. What does that mean in reference to our trading, or in reference to my trading? In reference to my trading, what this tells me is that we could see a bounce out of this market. Now, could we see this market completely reverse and go up? Yeah. There's no way of knowing what the market, or exactly what the market's going to do. The only thing I can trade based on is my analysis and my strategy. So what I know based on my analysis is that we're at a key level of structure that could provide a bounce. Now, the beauty of doing this analysis on the daily chart is that if you trade any other time frame, you can right now say, okay, this is a zone of support. I'm looking at this right here as a zone of support because it's been tested multiple times in the past. Now that we're at this zone of support, what I want to do is change my bias. Instead of being short, because we were in a downtrend, instead of being short, now my bias is long. Just until we get out of this zone, my bias is long to see a move higher, a possible bounce out of this market. Now, I'm not looking for a complete reversal, although that may happen. What I'm going to be looking for, at least for first targets, is 80 to 100 pips out of this move, out of this euro dollar pair right here around the 1.1274 level. So at this level, again, is an area I'm going to be looking for possible long trades. Now, if we get below that level, I have another level of possible support right here at 1.12 even, which is another level I'll look for possible bounces from. Something like this could definitely happen. And then I'll look for another counter trend bounce there, along with the fact, guys, that if this market pushes down below this zone, I'll be looking there for possible short trades. That's in the future, though. That's way in the future, so we won't talk about that quite yet. As for resistance, if this market pushes back up to this level right here again, if we get another push like this right here, then that's a level I'll look for a possible bounce to the downside. Again, from these levels, I'm dropping down to smaller time frames, and I'm looking for 80 to 100 pips. I'm not saying that when the market gets to this resistance level, we're going to see a major decline. We absolutely could, but that's just too far in the future for me to determine. And what I can trade based around, what I can actually use in my trading, is knowing that we're likely to get these bounces of around 80 to 100 pips from these zones of structure that have been tested multiple times. So that's what I'm looking at on the euro dollar. Let's go ahead and move on now. Next currency pair we'll take a look at is the pound dollar. I will delete my analysis here so far. All right, same thing. Let's start with what is the trend of the pound dollar. This pair is in a period of consolidation. That's easy to see, but the minor, I guess you could call it, underlying trend is up at the moment. And the reason for that is because we've had a market that pushed up. When we pushed up, we broke and closed above this previous level of resistance. We then pushed down into a higher low compared to our previous low, and this was our higher high compared to our previous high. Then we get another break, putting us into trend continuation. We pull back. We've now retested that level. What I'm waiting on right now is a pullback. I need to see this market at least get back down to this level of structure around 1.3 before trying to place a trade, because at the moment we're just in no man's land here on the pound dollar. But with that being the case, let's actually, since we're in no man's land, talk about what we're waiting on next and where we can actually look for trading opportunities at. If the market gets back up to this level of resistance at 1.3304, around 1.33 even, at that level is a level we can look for possible, or I'll be looking for possible shorting opportunities. And as the market pushes back down, again, as I just said, around the 1.310 level, that's a level I'll look for possible long trades out of the pound dollar. So that's kind of what I'm going to be looking at when it comes to trading on the pound dollar. All of that's in the future. That's going to be starting Monday, and it'll probably take a couple of days for the market to get to either of these zones. But that is the analysis on the pound dollar. Let's move on now on the dollar yen. And here on this pair, we have a market that is just broken structure to the downside, meaning that we're now in a downtrend. Let me explain that to you. We started from down here, had our push up that broke resistance. That means our new higher low and our new higher high has been established. We then created a trend here, but recently, what have we done? If we draw our line right here, and let me zoom in because this could absolutely be getting hard to see for you guys. So zooming in here, this was our previous level of support. We are now pushing below that level. It is Friday, so if we close below that level today, then what I will be looking for out of this pair is a potential reversal in trend, meaning that we've been trending up and now I'll be looking for a possible reversal to that uptrend. I'll be looking for the market to head lower and then give me some kind of pullback to the 110.25 level, or a pullback up into this resistance for me to go short out of the dollar yen. That's what I'm looking for here out of the dollar yen. We'll move on now to the Aussie dollar. On the Aussie dollar, big period of consolidation. I'm not even going to do analysis on this pair. There's really nothing I'm looking for unless this pair gets back down to around this level of structure at 0.7 even. Other than that, this is a sit on my hands type pair. I'm not going to be doing anything in terms of trading with this pair until we get down to this zone in green, or possibly up to the zone around 0.7208. That's the only times I'll be looking at this specific currency pair for a trade. Next up, we have the dollar Swiss. The dollar Swiss, I'll delete all of my analysis so far, start over, has just broken structure to the downside, broken and closed below this level of structure support, meaning what are we expecting? A trend reversal. We were in an uptrend from here, low to a high, higher low, higher high. We pull back, we create a trend by breaking and closing above, then we push down, we break and close below. Now we're expecting a possible potential reversal, and in this potential reversal there's a few different areas, or at least a couple of areas I'm looking at for possible shorting opportunities. The market got close to one today. Throughout the rest of next week, I will be looking at this area right in here between 0.995 and 1.0. I'll be looking at that area and really closer to the 1.0 area for possible shorting opportunities out of this pair based on the reversal we've just seen. And if the market makes it back up to this resistance, that's another level I'll look for possible shorting opportunities. To the downside, when it comes to levels of structure that I'm looking for possible long opportunities out of this pair, the one that stands out to me is right here. The reason for that is because of the amount of times this level has been tested in the past. So if this market can push a little lower, or if we do get that short trade, this is the level I'll look for targets at, as well as be looking for possible long opportunities out of the 0.9872 level. This of course is a zone of structure support that's been tested multiple times in the past and that could react as support once more for the dollar Swiss. And that, my friends, is the end of an extremely long video. I am parched. My mouth is extremely dry from talking so much. So I hope that it's been extremely beneficial for you. If it has, make sure to click the like button. Make sure that you are subscribed here. Also, we have some other free content linked in the description if you'd like to learn more strategies that we use, just like the one that I shared with you at the beginning of this video. I have those for absolutely free. We have them for free for you, again, linked in the description. And if you're ready to take the next step on your path to becoming a successful trader, if you want to learn a little more in depth the entire process of building a trend, the EAP training program that we've offered for the past few years here at the Trading Channel has already helped thousands of traders come out the other side meeting their trading goals and their trading expectations. If you're interested in that, there's a link for the EAP training program in the description as well. We have a few openings left, so if you'd like to get involved, click that, check it out. Otherwise, I will talk to you guys in the next video. I wish you the best of the best when it comes to your weekend. It is Friday, and I wish you the best of luck all next week in your future trades. Backtest over the weekend. Make sure to try this strategy out that I shared with you at the beginning of the video. I'll talk to you guys in the next video.